Joining us now is Ron Acoba, Chief Investment Strategist at Trading Edge. Good to see you again, Ron. Welcome back to the program.
Hi, Ms. Kathy. Good morning, and thank you for having me.
All right, so given how unprecedented the event risks we've faced, not only this week or this month, but since the start of the year, from Trump's tariffs to the anomalous flood control projects, to what extent do you think did technical analysis really aid you in seeing the next bout of aversion in risk assets, like, say, stocks?
Well, technical analysis essentially is a good tool to use, especially by pinpointing specific levels of potential levels of support, potentials of level of resistance, especially, for example, when the market is just trading sideways. Because when you are trading sideways, the levels where the indexes tend to rebound is pretty obvious, right? For example, over the past few years, the index has just been trading sideways between say around 5.8 to 5.9 to a top of around 6.5, and we've pretty much just traded in a wide choppy movement in and between those particular levels over the past several periods. So the use of technical analysis allows us as traders and fund managers to pinpoint levels where we can perhaps buy, where we can perhaps take profits. And in my case, it actually helped me isolate individual names that may outperform the general market. For instance, while I've talked about that the index has just been trading sideways for the past several days, there were bright spots, right? That technical analysis allowed me to zoom into it. At one point, DG Plus was one of the best performers. We were able to pinpoint that because technical analysis allowed us to see where the start of the momentum would be, right? Recently, prior to the gold's decline, gold at 2,000, we were able to pinpoint that gold was going to start a trend following its movement past 2,000, and more recently, gold was going to again restart that trend following its movement above its previous trading range resistance at 3.4. Specifically
to
to
gold, because I guess people would understand what technical analysis is all about. When you see that chart, it's very clear that it's had a pretty good run up, and yesterday was also a big marker because that's a near all-time high. But then we saw that drop, and it was a drop that you contextualized as being the single biggest drop in at least 5 years. So what indicators do you go for next to see where gold goes next?
Well, to give you context, talking about gold, from early August up to just a week ago, gold has had a massive run up of about 29%, coming out of that flat consolidation that you can see in the chart, where gold prices just moved sideways within a tight range between 3,200 to 3,400, I believe, for 4 months from around May to August, if I remember correctly, before finally gold was able to punch through that resistance, allowing it to surge to as high as 4,375. Right.
Interesting that you marked the lower part of this graph in pink.
Yes.
That's the relative strength index.
Yes.
Is that correct? And you're seeing that it went to a level above overbought. In fact, it's quite rare that you say it's extreme overbought conditions.
Well, I mentioned extreme because the momentum indicator reached an overbought level, not just on its daily chart, but even if you switch it to a weekly chart and even to a monthly chart, the momentum indicator we're still flagging an overbought condition, which warranted a trigger of an extreme overbought warning. Whenever you have that, it's actually the security is at a precarious level where it would likely either consolidate, move sideways, or or pullback, which is again warranted because
And that's
prices
exactly
don't.
what we saw. It did have a second day's pullback, but still well above $4,000 per ounce.
Yes.
What do the indicators say now where it will head next, and when might be a good time to buy in?
Well, on its daily chart, the momentum indicator is now has cooled down a bit after reaching an extreme overbought reading. However, in its weekly and monthly time frame, indicators remain to be overbought. So its downward movement, at least in the short term, appears to have some more room to go lower. And relatively speaking, gold is trading still at above 4.4, and its high is almost. I mean, gold as of now is trading at a little over 4,000, and its all-time high is 4.4. Let's say 4.4. That's just a little less than 10% decline relative to how it performed in the last few months of 29% since August and 60% since the start of the year. So let's say a 10% decline is just really normal volatility in my opinion, and actually warranted because of its massive run up year to date basis.
That kind of confidence you want to instill into somebody who's just invested in gold and then lost 10% of the money in just a single day. But there is a correlation as well with the Philippine peso. We now see it at a near 9-month low. And let's take a look at that chart, because it's very interesting that we're now approaching the possibility that it might breach 59. What do the technicals say that makes you confident saying that?
Well, the common denominator between gold prices and the exchange rate is the U.S. dollar, right? Of course, gold is denominated in U.S. dollars. One of the key reasons why we saw a decline in gold recently is not just profit-taking actions amid its massive run-up since the start of the year, but also as investors now is tuning into the release of the latest CPI data in the U.S., which, based on estimates, headline inflation in the U.S. is expected to have risen to 3.1% in September, which is actually the highest since May 2024. Of course, an increase in inflation would be positive or bullish for the U.S. dollar directly. That's why we see an uptick in the U.S. dollar in itself, and a decline in gold as of late. And going to the U.S. dollar peso exchange rate, the exchange rate is now again testing its 58.44 resistance level, the same level that it marked back in August. So if we see a 3.1 or even a higher inflation print in the U.S., that would actually trigger more inflows to the U.S. dollar, leading to a further decline in gold and leading an uptick in the local exchange rate.
So we're looking at a record low on the exchange rate then in the next few weeks?
It's quite likely, because now we're testing the 58.44 reaction high, which is its nearest or immediate resistance. Above that, it's already 59.08, which is its all-time high or all-time low for the peso relative to the U.S. dollar. So it's quite likely that the peso will be headed that way, especially on the fundamental front, that the BSP is actually more keen in cutting its interest rates onwards to 2026 amid the potential slowdown in our local economy because of this ongoing corruption scandal.
Interesting you make a mention of the fundamentals or the lack thereof, because as a technical analyst, you just focus on the charts. So how do you meld that then? Just going back to the PSEI, if we can just push up the chart again and talk to us from a technical standpoint, building in the fundamentals or the lack thereof. It's been down about 1.4% in the past month, roughly 18% compared to the same period last year. What does this descending channel now tell us on where it heads, given that we typically believe that there might be a Santa Claus rally by December?
Maybe not. But based on how the prices are moving, at least from from a technical perspective is that it appears that the index may retest its recent low of around 550 as it encountered a resistance at the upper bound of its declining or descending channel, as you can see, which is at around 6,100 level. That 6,100 level is also in line with its 50-day moving average, where the index in the last 4 or 5 weeks also hit a resistance when it was doing a high of 6,200 before it pulled back. So it's quite likely that we will retest and continue to trade along that descending channel and retest our lows.
So
in terms of go
ahead.
In terms of fundamentals, before we get to the fundamentals, in terms of market breadth, in terms of the components of the index itself, actually the only reason why the index is trading at 6,000 and not 5,800 is because of ICT and because of Meralco. Why? Both ICT and Meralco are trading at new highs, and combined, they take into account about 20% weight in the index. While on the other hand, the rest, the 28 other names, specifically the heaviest ones like SM and Ayala Corporation, they are trading at the lows, right? If you look into the banking sector, of course, they also contain a big weight in the index. BDO, BPI, Metrobank are also trading at near their lows. If you look at the telcos, the next bigger ones, PLDT and Globe, they're also trading at their year-to-date lows. So in terms of market breadth, in terms of broad performance, it's actually only 2 stocks that are carrying the weight of the entire index, and that's why the index is at 6,000. Because if you remove the performance of ICT and Meralco, we will be at 5,800 automatically.
All right. Well, we hear you, and we hear those 2 stocks that are lifting the markets. Thank you so much for that deep dive. Appreciate all the learnings there. Ron Acoba of Trading Edge.